What's up, traders? Welcome back to the channel. In this video, I'm going to show you guys a price action strategy that's going to absolutely blow your mind and give you an extremely high win rate using an indicator. Yeah, I know price action indicator, they don't mix, but we designed an indicator specifically meant for price action and to help you with those trades. But one thing actually before we start, I want to announce that we're doing a $500 giveaway on this video to one of our lucky subscribers if this video hits 500 likes. So make sure you like this video and subscribe. Let's get into the video. All right, guys, let's get into the strategy. So you're going to want to use this one indicator. I'm going to show you guys exactly what settings you're going to want for the strategy to work on the indicator. So the indicator you guys want to use is called Elite Price Action. If you guys don't have access to this indicator yet, don't worry. I'll show you at the end of the video exactly how you guys can get access. So in order to activate the settings for this indicator, there's two ways that you guys can do it. Simply just hover over where it says Elite Price Action, then hit the settings icon. Once you hit the settings icon, it's going to look just like this. These are the settings that you want to have enabled. So you want to have order blocks turned on, candle colors turned on, short-term break of structure and change of trend, and the long-term break of structure / change of trend. Very simple. Then you can press OK. Your indicator is going to look just like this on your charts, and you're going to need nothing else but this indicator. And the second way that you guys can activate the settings from this indicator, all you got to do is just right-click on one of these order blocks and then hit settings. And then boom, it's going to bring up the settings menu again. Now, obviously, in order to trade price action, you're going to have to know the basics of price action. So let me teach that to you real quick. Okay, so I want you guys to pay attention to my screen right now, and I want you guys to understand that the market can move only three different ways. You have what you call an uptrend, you have what you call a range, and you have what you call a downtrend. Now, this is very important to establish very early on your chart kind of trend is currently on your market. So how do you know if the market is in a bullish position? Well, that's honestly very simple. All you want to do is you want to look and see if the market is producing higher highs and higher lows. So for example, we see right here on this price chart that the price went up, created a high, came down, created a low, and the next high was higher than the previous one, and the next low was higher than the previous one. And as you can see, this repeated itself, which makes this an uptrend. Now, when you're looking at a ranging market or a consolidating market, then what you want to see is you want to see no higher highs and no lower lows. It's basically just flat and staying between the middle of the chart. This is what it looks like if you are in a ranging market. Next, guys, is a bearish market. A bearish market is when the price creates a lower low, goes up a little bit, then creates another lower low, and then a lower high. This is very important. And as we can see, guys, it's moving in a downwards position. One thing that beginner traders don't understand is that the price will never just go up like this or down like this. You're always going to have what you call a pullback. So for example, price is going up, it's going to come back down just a little bit, then go up again, and then come back down just a little bit. Then eventually what can happen is you'll have a lower high and then a lower low. And then this is when you can start to understand that the current trend is about to change. Now, what we need to understand next is the break of structure and change of trend. Let's talk about break of structure. What exactly is that and how do you identify that? It's very simple. A break of structure is when a new high is created or a new low is created. So for example, over here, take the brush tool, we can see that a new high was created right there. And the second that high is broken around this area, this creates a break of structure. So there is a break of structure around this area right here. Same thing if we're looking at a bearish momentum. So for example, the price came down here, it went back up, did a pullback, came back down, and it broke this last low right over here. It broke it over here. This means it had a break of structure. You broke the last structure that was there. Very, very simple. In a ranging market like this, there is no break of structure. Now that you understand what a break of structure is, now what is a change of trend? A change of trend is when you have a bullish structure just like this happening where you're creating higher highs and higher lows. Then the price comes down and breaks past the last higher low. So now what happened was you had a bullish trend that turned into a bearish trend. And obviously the same thing can happen if you're in a bearish momentum. So If the price is looking like this, for example, and then the price goes down here, creates a lower low, but then goes up and creates a higher high that you see over here, this means that what happened, you got a change of trend. So now let's take a look at some real chart examples so you guys can understand a little further. Okay, so let's take a look at the chart here, guys. We see the price is coming up and then comes back and does a little bit of a pullback, okay? We go back up and we see that we had a break of structure over here. The price has broken past its last higher high. It went up and it gave us a little BOS symbol here, letting us know that there was a break of structure. Price goes up again and we got another high created, came back down, and then it broke it again over here, which is why we got another break of structure before it happening again over here. Next, guys, we see that we have a very bullish pattern. And the next thing that happens is that we get a change of trend over here where we had a lower low. And as we can see, the price started to fall because now we went from a bullish market into a bearish market. Very simple. Another example, guys, we can see the price again over here is very bearish because we had a change of trend earlier from the bullish side. The price came down, created a new low, went back up, and then broke this low again, giving us another break of structure. This happened again multiple times over here, and over here, before eventually we got another change of trend signal right here that the price is starting to move to the bullish side. And as we can see, guys, that's exactly what happened. The price started to go up, and we got into a bullish market. Now that we understand the basic price action, let's talk about the indicator and how it can help you and what strategy you can use in order to start winning and making money in the markets. Now, one thing you want to understand with this indicator is that you have your short-term break of structure and change of trend and your long-term break of structure and trade of trend. Now, the way you can identify the difference on the chart when you have both of these checked on is if you have a solid line, that is a long-term change of trend. And if you have a solid line that says break of structure, that's a long-term break of structure. The short-term ones are the ones that have the dashed line like you see right here, guys, these little dashed lines. That's how you identify long-term versus short-term. Next, guys, you have the order blocks. What are order blocks? Order blocks are areas of supply and demand. These are areas where the most of the traders are either buying or selling. These are the areas that we want to be trading at in order to get the most amount of profit as possible. And these are the areas where you're most likely going to see a move to the upside or downside. And then you have your candles color feature. This changes the colors of the candles that you normally have on TradingView and gives you a better understanding of what's actually happening with the price. So for example, we can see right here that if the candles are dark green, that means we are a little bit bullish. If the candles turn into a bright green, that means we are very bullish at that time. So this can help us stay in trades longer or understand when we should get in and when should we get out. Because using these candle colors, you'll have a better understanding of the momentum that's happening on the chart. One thing to note, for the candle colors to work properly on TradingView, you have to do this right here. Anywhere on the graph, right click and hit settings, and then make sure you have the borders colors turned off over here, then press OK. If you have it turned on, the candles color will not work as intended. So make sure this is off, then press OK. And the last thing, guys, up here in the corner, we have this little dashboard that shows us the change of trend on every single time frame, so we know if we are in a bullish or bearish market. This is very important to make sure you keep attention to this and understand what type of market you're in. So right now we can see on this current chart, we are completely bullish because we have green on every single time frame. So now that we understand what the indicator is, and now that we understand what basic price action is, now let's use it in a strategy so we know when we should be buying or selling and how to make money in the markets. Okay, so this is what you want to look for the first step of this strategy. What you want to do is you want to see if an order block gets retested. Now, what does that mean? That means an order block gets printed and then the price goes up and comes back down and touches that order block. That's what you want to see, and that's step number one in order to start entering your position. Once you see that the order block got touched again, then what you want to do is you want to look back and see what exactly happened in the market. Now over here, we can see that we were bearish short term, and then we got a change of trend symbol right up here because we created a higher high, and then the price came back down in a pullback and touched our order block. Next, what we see is the candles themselves went from red to green. This means that this is when we can start to enter our trade. So what we would do here is simply take our position size tool, we'll set where we're going to enter a trade on the green candle right here. We're going to take our stop loss and set it underneath the order block. And we want to target either 1.5 or a 2-to-1 risk reward ratio. And this is what our trade would look like. We would have hit this trade, we would have won right here. We can see again, it happens because we are in a bullish market, right? Because we had a change of trend to the bullish side. And if we zoom out, we can see we had a long-term change of trend over here. So now we know we're in a bullish market. So if we go over here, we can see very clearly, price came back down, retested our order block after it was printed over here. And then we got a big green candle right there. This would have been our entry. Again, we set our stop loss beneath the order block. And again, we target 1.5 or 2. This would have been another win. We could have also probably entered another trade over here as soon as we see that the price came back down and touched this order block a little bit. It was a little bit further away, but this could have been entered as soon as we saw a very green candle over here. So we could have taken a trade there, but that's a little bit more risky because it wasn't completely touching the order block at that time. Again, if we zoom out, look for more opportunities, we can see another opportunity right here, guys. The price, we're in a very bullish momentum right now. We know that the price came up, created an order block over here, came back down to test that order block. We would have got in at that candle. Our stop loss would have been beneath the order block, just about here. And again, we would have targeted a 1.5 or 2, and we can see that we would have hit this trade again and won that trade. Very, very simple to understand. Let me show you guys some bearish examples. All right, guys, here is a bearish example of the strategy. So we're looking for a short over here. We see that the order block was printed right here on these candles and then pushed out to the right. We saw that the price came back and pulled into this area and touched our order block. Then we see that we got a red candle right after the green ones. This is where we can enter our trade. So our short here would look like this. Our stop loss slightly behind the order block. And then we want to target again 1.5. This would have been another win right here. We could have again taken another entry as soon as the price came up here and we got a red candle. So for example, we could have taken this trade again right here. We got the red candle and we're aiming for 1.5 over here, which would have been this. And we can see eventually that trade gets hit as well. And again, we have more opportunities here. We can see that an order block was printed, price came back down, retraced back up and wicked into that order block. We could have taken a trade here because it had a red candle again as well. And again, stop loss behind the order block. We're aiming for 1.5 or 2, whichever you like, but that would have been a win as well. That's how simple this strategy is, trading with the price action indicator, trading strictly based off supply and demand levels, trading with the trend, and trading based off momentums that you see with the candles. All right, now, as promised, I'm going to show you exactly how you guys can get this indicator on your charts inside TradingView. Now, the thing with this indicator is that it is a private indicator. You will not find it in the public library inside TradingView. What you need to do is simply go on our website, elitesignals.com, and simply sign up for the membership. Once you sign up for the membership, then what you want to do is join our Discord server. And the simplest way of doing that is simply go over here and click join Discord. And then you're going to be welcomed into our Discord where you guys can make friends, talk about different strategies, share your profits, and all that stuff. And then also we give signals ourselves inside the Discord. So whenever I find a good opportunity in the market, I signal it to the group so you guys can get in on the same trade that I'm taking. And we have 30 different analysts, including me, that are giving you these alerts every single day for crypto, forex, or stocks. And here is an example, guys, of one of our analysts giving a signal inside of the Discord server. Our analyst here, Ghost, told us today to do a buy on GBP, JPY, a scalp, as we can see, and then the price hit the first take profit for 10 pips, then hit the second take profit for 20 pips. And that's pretty much it, guys. If you guys like this video, make sure you hit that like button and subscribe, because we are giving $500 away to one of our lucky subscribers if this video gets 500 likes. And make sure you hit that notification bell icon, because we are going to be releasing at least 1 or 2 videos every single month from now on, and you guys will learn a lot from them. So this is pretty much it. The video is done. Have yourselves a good day.